going on, Discord family and YouTube? And welcome back to another edition of Market Review with me, T. Haas. Today is June 3rd. Oh, shoot, I put June 2nd down here. Let me change that. Today is June 3rd, 2025, year of our Lord. And yeah, we're going to be reviewing the S&P 500. That was my instrument of choice today. And I want to make sure I review that, go over a couple things that I missed, a couple things I could have done better. But at the same time, I think it was a good day. Like it was a red day for me, but I think it was a good day. I think today what I can hang my hat on is that I was on the right side of price. I had the right idea, right? And then when I realized that price just didn't want to do what I wanted it to do, I was mature enough to just walk away. So sometimes like the P&L doesn't necessarily have to be the grade on the day, right? Like the grade on the day doesn't always have to be the P&L, I should say. Where the heck my chessboard logo here? Hold on, let me see something. Something disappeared. Forget it. I'll do it. I'll just do it without it. I'll do it live. It's all good. All right. So on the day, right, we had a really good dynamic plan today. Price action was very, very choppy to start the day, but eventually it did end up getting going. And once it got going, there was really no stopping the S&P. I mean, any of the indices, honestly. Like all of them really did their thing today. So let me finish this up real quick. I'm just gonna put this chessboard down here, and then I'll go right into the pre-market plan and then right into price action here. All right, cool. Got that done, and we'll lock that in. Sweet. So what was my plan on the day? My plan on the day was quite simple, right? I noticed that, on the daily candle, like we do every single morning, we turn everything off. We go to the daily, we go to the weekly, and we just look at where price was to start the day in the week. Well, the one thing I said about the weekly candles is since the week of May 12th, all we've been doing is making higher highs and higher lows. So the idea that that was going to stop, right, like just didn't make any sense. So to me, there was really no reason to hold the shorts, right? I didn't say you couldn't short the market. It just didn't really make any sense to say, well, I'm shorting this and I'm taking it down to sweep these lows. I talked about the daily time frame. We talked about this support or demand level that was potentially forming here. The market pushed up into the highs, sold back down to the lows of that area, 50% of this range here, started to make higher lows, tapped into average settlement price, pushed above the monthly settlement price. Note this on your chart, 59.16. It will become very important. Monthly settlement price came back into 50% of the day and then boom, exploded. I understood the direction of price. I understood where price was going, but that doesn't mean you can still execute it, right? I executed poorly in with the information that I had going into the day. That's a human error, not to be confused with the analysis in you. Everybody can analyze the market properly. It's how you execute that makes you the money, okay? So let's go right into the gray box here, which is my sentiment or my thesis overall on the day. My current conditions, I had us in the markup phase based off everything that I said before. We were bullish as long as we stayed above 58.67, which was yesterday's low. You can see that we remained above that level. We were bearish as long as we stayed below 59.55. And after multiple attempts to break this level, we pushed through aggressively and traded above it. Therefore, we remained bullish above 59.55.75. Macro, we finally broke out of half day Tuesday candle. I call it half day Tuesday because whatever reason, TradingView counts that as a whole day, and it's definitely not a whole day because the market opened and closed on Monday and it opened and closed on Tuesday. So there should be two separate candles. But on TradingView, it's only one. Anyway, I digress. I said, and now it appears ready to look for more upside. Again, I write these plans every single day before market opens by about an hour and a half. So if you read them, you have plenty of time to digest what the market is doing on that particular instrument. And then I go over the plan 30 minutes before the market opens verbally. And I offer the opportunity for me to go over any other instrument that you're trading 30 minutes before the market opens. So if you're interested in that, you want to see me, you want to get my thoughts on the instrument that you're trading, as long as it's one of the three indices that I trade, right? But if you're interested in that, you got to show up in the morning for the market, pre-market prep by 9 a.m. All right. Eastern. All right. I said we are in super premium, meaning we're at the highs, right? Very, very close to them. So you can expect the resistance is going to be high when trading long positions. So shorts ain't really working and the longs are choppy. That's basically what I'm saying here. As long as the daily candle continues to push up and we are above the end wall from Sunday, which is this orange box here, right? I want to remain bullish. There it is. That was literally the entire plan. So what are we looking for? We're looking for the range, PM session range from 59.55.75 to 59.37 to hold, right? Which is what it did. We were looking to trade either short the highs and long the lows or break and retest off of this. And the break and retest is what I definitely should have traded, and I just didn't, right? I just didn't. So 59.26, 59.12, 75 is the low. We created instead of coming back down here, we actually created a gap that I will mark out for Thursday. Usually by Thursday, we get what's called turnaround Thursdays. And that's when we come back to fill these gaps. So if we remain bullish, I expect the end wall to stay intact. And this little gap right here that was left behind price, that'll be my target going into Thursday. My levels for the higher time frame, 4-hour support never got targeted, but we were looking for longs off this level. And then the 4-hour supply zone never got hit, but I anticipated either tonight or sometime in the London session for us to test this level and potentially go straight through it. Ultimately, everything was in line. I, the executor, the human aspect of trading, was unsuccessful in executing a winning trade today. That's all to it, right? So let's go down to the lower time frames and we'll talk about price as it was developing on the lower time frames. Couple things I like to note in the mornings, right? You can see I got these in walls here, blah, 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 blah. You can take all of this shit off if you want to, right? And just look at price from a future settlement standpoint. The red line here is monthly settlement, right? That's where margin settled for the previous month or this current month, no, previous month, I'm sorry. Most of the margins settled at 59.16. So do you think that that would be an interesting level for price to be at or for buyers to be interested in buying? You best believe it. Daily settlement, monthly settlement, average settlement, dotted line is average settlement, red line is monthly settlement, blue line is daily settlement, and then there's other lines on here. This purple line here is weekly settlement. So I want to pay attention to these levels because what ends up happening is the market creates structure at these levels. What did the market do? It blew through monthly settlement, held it, right? Put a doji candle here, came back down, held monthly settlement in the overnight session. London usually brings the low of the week or the low of the day. That's exactly what it did at monthly settlement. And then we rally above that level. So when we bring back all of our other stuff, right? We come back down to the 5-minute chart, right? And again, chessboard lows and chessboard highs are important. So what I'll do is I'll take away the end wall here at the top because it's a little hard to see. But this is where I got a little bit funky with price, right? When I say funky, I mean I lost, right? So if I turn on the macros, right, this is what I was looking for. And I'll show you on a different instrument that I'm gonna continue to trade as well, which is the Dow Jones, in which the one thing that I love to see out of 929.30 is the way that I view macro time is whatever we do inside the macro, I'm looking for us to do the opposite on the other side of the macro, i.e. we traded down into the macro. I anticipate us coming up. If we trade up into 930, I do anticipate more downside, right? Not necessarily a short all the way down here, but I anticipated the market coming down. The one thing that I said this morning, if you were in here, I said, hey, I want to see us take out previous day high first, and then I'll look for shorts. Well, I was impatient. I saw us tap inside of these white lines, which are the 30-second orb, 59.51. We dropped here. I didn't take it. I was like, all right, I'm not going to take it yet. If we come back up here, I'll short it. I shorted it here. We started to drop down. I got out of the position for break even here. I got back in here right at the highs. I got in here, aggressively started pushing down. I think I was up 10 points or 12 points for all of about 35 seconds. And then the market just came back up and ran my stop. So it was just loss after break even. Ultimately, the market ended up breaking above the previous day high inside of the macro I created myself, which is 1025 to 1045. We traded up into that macro, down back into the top of the orb. And when I went back and reviewed price before I made this market review, this should have been my entry here, right? Once the market invalidated me here, my thesis needs to shift to the bullish side. An invalidation doesn't mean you're done trading. It means that if you're being invalidated by the bulls and you're shorting this shit, you need to stop shorting it or walk away. I'm not upset with my decision because I chose to walk away, because cash is also a position. The reason why I chose to walk away, because although this is a trade in hindsight that I could have taken, I know me as a trader does not feel comfortable longing what I deem to be the high. And at the moment, it was high of day. I don't like to get long up here because I would like for the market to pull back. Now, the market didn't do that, but does that mean that, I'm a pansy for not taking the shorts, or, or not taking the jumping in, like, hey man, price is going up, you could just jump in and make money? He's like, no, bro, that's not how I trade, right? The way that I trade is I have a system, a framework, and a set of rules that I have to follow every single day in order to remain consistent in this market. The way that you get on top and you build an edge is you understand your edge, you repeat that edge, you retrade that edge, you backtest that edge, and you make it your edge. The minute you start trying to trade like everybody else, you don't have an edge anymore. And if you come to the market without an edge, you will pay with your account, period. That will happen every single time. Every now and again, you'll get lucky, but for the most part, that'll happen every single time. I don't know what I just did. Okay, here we go. I'm back. All right, so let's go over to the Dow Jones real quick. I'm not going to go over every instrument, but I did want to show you something on the Dow Jones that, I used to, for those of you that are new to the Discord, I used to trade the Dow Jones like literally every single day. And I think I'm about to go back to doing it because I just miss it, low key. But the one thing I love about the Dow Jones is it just does what it's supposed to do, right? It does what it thinks, like how I think, how my personality is, right? And I'll show you, because on this trade, right, I'm not going to use any of the curses because I don't want to turn this back on. But if you look here, what I was looking for price to do is trade up into 930, and I wanted to short it simply targeting these lows. Well, what did the Dow Jones do? Traded up into 930. Maybe I get stopped out by this first entry. Probably wouldn't have taken it because we had no break of structure. But right here, we had to break a structure, right? And if I turn, let me turn this off for a second. Let me turn off top-down analysis. All right. So if you were to just take 50% of this low, right, either this low or this low, I would have taken this one because I'd have been trying to get an early entry, right? We closed below this low, and what did the market do? We traded back into 50% of the previous low and the previous high. Shout out to the structure videos if you've been watching those. And what did we do? First tap, aggressive rejection, came back up, second tap, third tap, fourth tap, short, easy money. And where am I taking it to? Wherever the frick 1010 leads me, right? Wherever 1010 leads me, that's where I'm getting out. But I wouldn't need to, because guess what? We landed right in the lap of the NWOG, and I would have got out right here, no problem. And to me, that's the biggest difference between the Dow Jones and other instruments that I've noticed, is that no matter what's going on, the Dow usually follows structure, and it follows it to the tick. And that's why I love it. It's just very, very consistent in that. So I just wanted to point that trade out where, some people may say, well, how you should have been looking for shorts. It's like, yeah, I was fine looking for shorts, right? The instrument that did it, that did what I really wanted it to do, was the Dow Jones. Because if we turn this on, right, we turn the top-down analysis, what was I looking for? I was looking for the market to sweep the previous day high. We did right that, went right to previous day high. We failed. And then after the sweep, we started the descent back down, swept the lows, tapped into the NWOG. I get out of the shorts here. I re-enter long, and then it's game time all the way up. Hold this trade basically all freaking day. So again, I'm not switching back to the Dow because I like, flip-flopping. It's just, I know where my bread is buttered. And sometimes you got to get back home in order to get, back centered. So that's what I'm going to be doing. You'll see a SM or YM plan tomorrow. I'm going to do some back testing on it. There's a couple things I want to double check, but for the most part, price action was clean, man. We went one direction, and normally these days cook my accounts. But I didn't let it today. That's the one thing that I can hold my hat on, is I did not let it do that today. So that being said, I'm not going to take up too much of your time. I hope you guys enjoy these videos. Leave a comment down below. Let me know how you like them. And if you have any questions, don't feel free to reach out in the Discord. That being said, my name is T Hobbs. This is the Market Review, and I'll catch you guys on the next one, man. Peace.